Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today, we're diving into High Trend International Group's annual report, and let me tell you, it's a bit of a roller coaster. Think international shipping, a pivot towards carbon neutrality, and enough management changes to make your head spin. Let's untangle this story. First, some basic facts. High Trend International Group, formerly known as Caravel International Group, is a holding company incorporated in the Cayman Islands. They're in the shipping business, primarily operating in Asia. As of the end of October last year, they had about 117.8 million Class A ordinary shares out there. For now, they make nearly all their money from shipping stuff for customers in Asia, especially around Singapore, Dubai, Korea, Japan, and India. Now here's where it gets interesting. High Trend had big plans to launch a new tech business called Co-Tech, focused on wood desiccation, which basically means drying out wood during shipping, using ships' waste heat. Sounds innovative, right? But unfortunately, Co-Tech ran into serious problems and was shut down in 2024. Why? They said lack of funding and the fact that they were unable to confirm that the business would be successful. But don't worry, this story isn't over yet. Now, the company's trying something totally different, jumping headfirst into carbon neutrality for the shipping industry. They're looking at things like onboard carbon capture, which is trying to trap carbon dioxide right on the ships themselves. That's designing the systems, setting them up, moving the captured carbon, and even getting involved in carbon credit trading. Like any good corporate filing, this one has a lengthy risk factors section. If these potential events happen, they may have a significant adverse effect on our business, cash flows, financial condition, and results of operations. Let's talk risks. One big one is their reliance on chartering vessels from Topshin Shipping Limited. That company is controlled by Mr. Dong Zhang, who used to be a big shareholder and executive for High Trend. If that relationship sours or Topshin changes the terms, High Trend could be in a tough spot. There is no telling what could happen to their vessel capacity if things did go wrong. Another challenge, big changes in leadership. High Trend has a whole new management team, and those kinds of shifts can create uncertainty. A new management team can mean strategic reassessments, different business decisions, and changes of direction. The company has also been losing money for the past 2 years. The company incurred net losses of $21.2 million last year and $15.8 million the year before that. And let's be real, this whole carbon neutral thing, it's a big question mark. They might not be able to actually get into that business, and even if they do, success is not guaranteed. Here's a fun fact. High Trend is a holding company, which means they depend on their subsidiaries to send them money. But those subsidiaries, mostly in Singapore and Samoa, might not always be able to pay dividends due to local laws. Also, there's a risk of being classified as a Singapore tax resident, which could result in our company being taxed there. And of course, there's the usual stock market volatility. High Trend stock has been all over the place, and there's no guarantee it won't tank again. There's also the possibility of being kicked off the Nasdaq Stock Exchange, which would be a major headache. A possible delisting could come from not maintaining certain listing requirements. If the major shareholders decide to dump their shares, that could drive the stock price down even further. Since High Trend is a foreign company incorporated in the Cayman Islands, it doesn't have to follow all the same rules as US companies, which means less protection for investors. Speaking of the share price, High Trend's share price may be volatile and could decline substantially as a result of these broad market fluctuations, and that could lead to class action lawsuits against our company. It's clear from all of this that it will be important that the company maintains continuous compliance with Nasdaq requirements. Also, here's one more thing from the risk section worth emphasizing. High Trend may not be able to maintain relationships with local shipping agents, port, and terminal operators. And here is a very important thing to always consider when analyzing these companies, is that the shipping industry can change according to outside influences of the company. Things like global production, distances between cargo product and sea, deglobalization, and currency exchange can all have dramatic influences that the company can't directly influence. What happens to the company if there's an increase in trade protectionism that causes an increase in the cost of exported goods? Things could become very risky as the shipping industry would take a negative turn. Increased inspection procedures and tighter import and export controls could also increase High Trend's costs and disrupt their business. The filing makes clear that the perception that their vessels are a potential piracy or terrorist target could have a material adverse impact. The filing also mentions the importance of data security when it says that the group strives to manage cybersecurity risks and protect sensitive information through various means, such as technical safeguards, procedural requirements, close monitoring on our corporate network. Let's move on to some of the more important changes for High Trend. Dr. Guohua Zhang, who used to be the main guy and chief executive officer, was the beneficial owner of a whole lot of the shares. Then he transferred a bunch of shares to High Trend, which changed who controlled the company and reducing his beneficial interest to just 11.55%. That transaction started a chain of events that ultimately resulted in a new executive management team taking over in 2024. Then shareholders voted to officially change the name from Caravel to High Trend, reclassify the shares, and remove Dr. Zhang from the board. The team is now led by Chairman Jinyu Chang, Shixuan He as Chief Executive Officer, Zai Zia as the Chief Financial Officer, Xuanhua Zai, Christopher Ren, and Jing Sang as independent directors. High Trend primarily makes money from two sources: ocean freight under voyage contracts and providing services to other ship owners such as leasing. The key elements of their strategy are to expand routes across the globe, continue to expand their customer base for ship chartering, continue to grow our client base. High Trend faces a lot of competition in the international shipping industry from various global and regional players. In the past, the company agreed to purchase 4 sets of maritime carbon-neutral intelligent control platform systems from a related party. After determining that their technologies would not meet their requirements, the company did not deliver any systems. This agreement was mutually terminated on February 29, 2024. The company changed its auditor several times. They dismissed Markham Asia and hired WWC PC as their new auditor. The reasons for the dismissal were not stated in the report. As a public company, it is subject to laws and regulations and must maintain and document internal control over financial reporting to meet the requirements. And here's a heads up for investors: High Trend doesn't plan on paying dividends anytime soon. Management concluded that their internal control over financial reporting was not effective due to material weaknesses in their internal control. But they have a plan by including engaging more qualified accounting personnel and consultants with relevant US GAAP and SEC reporting experience and qualification to strengthen the financial reporting and US GAAP training and to set up a financial and system control framework. Also mentioned is that the company had issued senior secured convertible promissory notes, but then bought them back, issued September 2024 notes and October 2024 notes, and these transactions were used for general working capital. Okay, let's get to those numbers. For the year ended October 31, 2024, total revenue was $108.2 million compared to about $95.3 million the previous year. That's a roughly 13.6% increase. Costs went down, however, from $107.1 million to $100.1 million. And so they had a net loss of $21.2 million compared to a net loss of $15.8 million. High Trend International Group presents a mixed bag. Their attempt to pivot towards carbon neutrality in the shipping industry is an intriguing idea. The company relies on Topshin shipping for the time being, which may be risky given a new management team, and this new management team has proven they are willing to change core strategies. There are some risks with this, but perhaps will offer more flexibility in the long run. Perhaps a strength is that they were able to grow revenues, but at the same time the company is still not profitable, and there are real questions on whether they will ever be. The report identified material weaknesses in internal control over financial reporting, and that there is no guarantee to be able to fix it. Overall, High Trend International Group is a high-risk, high-reward play. The company's transition to sustainability and operational efficiency improvements hold potential but are coupled with significant financial and governance concerns. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more insightful corporate decodes. Let me know in the comments what company you would like us to analyze next.